To paraphrase Navin Johnson, the new smartphones are here! The new smartphones are here! Investor Beat starts now. Thanks for watching. I'm Chris Hill. One day ahead of the monthly jobs report, things were looking good on Wall Street. The market being helped today by the ADP report showing private businesses adding 176,000 jobs in August. Joining me in studio today, Matt Koppenheffer, Jason Moser. Guys, our top story, the smartwatch war has officially begun. Samsung and Qualcomm both unveiled smartwatches today. The expected prices are around $300 and include features like instant messaging and taking photos. You're excited about this. You're going to be one of the first people to buy, aren't you?
I could be. I probably can't be because I don't have a Samsung phone, and the Samsung one is the one that I'm really excited about. If you've watched it, you said you hadn't watched the videos when I asked you before, so I won't ask you now. The videos are really cool. This is a cool product. I was skeptical of the whole idea of a watch. I'm more skeptical of the idea of the Google Glass, but after seeing these videos, after seeing what this is capable of, I'm pretty excited. I think this is a good product.
Yeah, interesting to note that Samsung went the route of essentially tying their watch to their phone, so you kind of have to have both devices on at the same time, but it does protect their ecosystem. Is that the right move?
I mean, for now. I mean, this is very early stages of this product development here, so I don't even know if it really matters whether you're first mover or second mover or whatever. I mean, it's just going to sort of be interesting to see how this all shakes out. I agree with Matt. I think I'm more skeptical of glasses than something like a watch, but Chris, you know what I like about this thing? I don't have to charge it, okay? Now, it strikes me as just another thing that I'm gonna have to charge if I get a smart watch. I mean, I gotta plug that in every night along with my phone. I mean, to me, I didn't see anything in the videos that my phone can't already do, and that's my hang up here, is I wanna see something that these smartwatches do that nothing else can do. Then I'll be compelled to buy it, but as it stands, it's just gonna be kind of a fun one to watch develop.
Where is Apple in all of this? They're not gonna be the first mover. That's never stopped them before, but do you think that the pressure is really on them now to come out with something even better?
Well, I think that's key what Jason said, that first mover, second mover. It's not really I'm excited about the product, the idea of the product. We've been talking a lot about the idea of Apple coming out with a watch. They're not the first mover here, but I think the real excitement will come when Apple comes out with its product. Samsung, good job getting out ahead of Apple, but it's still going to be about Apple's watch, I think.
All right, let's get some of the day's movers and shakers. LinkedIn hitting a new all-time high today after boosting the size of its secondary offering to $1.2 billion. Are you buying the stock at this price?
Well, I'm not buying it, but I do own shares currently, and so yeah, I think the stock has probably gotten a little ahead of itself, but that's what this was.
But you're not going to complain.
I'm not complaining one bit. I mean, they're just taking advantage of a stock price that maybe got a little bit ahead of itself. You know, I think that yesterday's reaction, possibly people were thinking there's going to be some dilutive action here. Share count's going to increase by about 4.5%. But as David Meyer made such a great point there, it's only dilutive if it destroys value or doesn't create value. These guys are investors. They're building this great growth company. They know what they're doing. I am quite confident this is going to grow the company and build value over time. So I like the move.
Ford Motor closing in on a 2-year high. U.S. auto sales in August rose 17% year over year. You look at the past 1-year performance of the stock, it's really been a great year for Ford.
It has, and I think that there's been a lot of a backlog of people not buying new cars because economic times were tough, and now you're seeing the other side of that. Auto sales are doing great, and along with that, Ford and the other major auto companies have really cut out a lot of expenses, and so at these kind of production levels, they can be very, very profitable.
Groupon shares rising after the company got an upgrade from an analyst at Morgan Stanley. It seems like Groupon sort of turned a corner, but I don't know, is this upgrade warranted?
I don't know. I mean, I always look at these upgrades and downgrades with a grain of salt because you never really know what the relationship there. I mean, they're doing these upgrades and downgrades, and they have big-time clients with big-time money in a lot of these big dud stocks like Groupon. I appreciate the fact that they're trying to change their business model. They have to. But again, they're going up against these companies like Amazon, like eBay, like OpenTable to try to get in these new parts of their business. I admire that they're trying it, but I still just, they're going against so many giants in those respective industries. I just stay away.
And finally, country-style cooking up big on heavy volume. In this case, the country is China, and the company operates 270 quick-serve restaurants. It looked like they had pretty good second quarter results, but those results were back in August. What's going on here?
Yeah, I'm going to say this isn't a company I'm intimately familiar with, but it's a really neat story. They're aiming to be the #1 quick-serve restaurant in China, which obviously is a big, big market. This is still a really small company. The second quarter sales were 53 million. By comparison, Yum Brands, who we think of when a lot of times when we think about China and restaurants, $2.9 billion in second quarter revenue. So this is a tiny one, up 14% today on essentially no news. I think investors that are looking at this are going to have to be prepared for those kind of swings, both on the upside and on the downside. It's a long runway for this to play out.
All right, that's going to do it for Thursday's action. Let's look ahead. Jason, what's the stock you've got on your radar?
I'm going to be actually taking a look at Yum Brands. They are going to be releasing their China same-store sales for the month tomorrow. This has been just this long, slow, drawn-out, just train wreck ever since the avian flu concerns there, and same-store sales have just plummeted. The problem is that Yum owns most of these Kentucky Fried Chicken or KFC stores and Pizza Hut stores over there, so they have to keep the stores open and the lights on. It's resulting in just awful operating margin numbers here, and so keeping an eye on the same-store sales numbers, seeing if they can kind of bring that back up, bring some profitability back up, because China accounts for half of their sales and about half of their operating profit, so it's very important.
Okay, Matt, what about you?
I'm looking at Discover Financial Services for no particular reason, but I spend a lot of time looking at the banking industry, and one of the things that the banking industry is dealing with are very low rates on the loans that they're making, and that's due to the low interest rate environment. Discover focused on credit card loans. They keep those on their balance sheet. They also do a lot of student lending. They keep that on their balance sheet. Those are much higher loan rates. And there's been, the technical term here, stupid low charge-off rates on credit cards recently. So that's been really good for Discover, and the results that the company has produced are really good. There's some challenges ahead, but I think it's a stock to definitely look into.
See, that's what you get. You bring in a banking analyst, you get jargon like stupid low. For Matt Koppenheffer and Jason Moser, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.